We're going to examine the Ripple v. SEC case and attempt to determine why it is still pending in light of the recent delisting, removal, and release of HEX, one of the largest cryptocurrency Ponzi scams. They will no longer be challenged by the SEC. We'll examine the charts for Bitcoin and XRP, as well as the V-shaped rebound that is developing right in front of your eyes. We will discuss the definition of a V-shaped recovery. Therefore, let's get right into it. The price of Bitcoin is $85,190. Right now, it has increased by roughly 0.5% over the last day. The price of Ethereum is $2,200. With both USDT and USDC trading at its dollar pegs and XRP maintaining steady at number 4 at $2.22, it is currently up 1.5%. Even while the total market value of cryptocurrencies is trying to return to $3 trillion, it is still $2.8 trillion. Everyone believes that we have entered a bear market, and they are all freaking out. The Tether treasury printer is now operational again. Yes, exactly. Just printing that out in USDT equals $1 billion. In your opinion, where is that money going? Do you feel that they are printing Tether in order to cling onto it, or do you think that they are doing so in order to support the price of Bitcoin? On this channel, we've been telling you for a while that $175,000 in Bitcoin is a lock. That will happen soon. We all anticipated a significant increase in Q1. We failed to grasp it. What the heck? How do we proceed? Let's return to the charts. We start over from scratch and proceed. However, we do not always enter a bear market just because our goals were not met. It simply indicates that it has been pushed out a bit further. There will still be a significant cycle this year. It's all still unfolding. Ethereum to $8,000 to $12,000, Bitcoin to $175,000, XRP to enter price discovery mode and perhaps reach double digits, Solana to reach $1,000, and a ton of cryptocurrency exchange-traded funds, ETFs, are on the horizon. Before we dive into these charts, I want you to consider this for a moment. Why would BlackRock be purchasing Bitcoin at these levels if the bull market was gone and a bear market was about to begin? If institutional players that are new to the cryptocurrency space understood that the markets will decline again, why would they apply for and seek approval for ETFs? Do you realize how awful it would appear if Goldman Sachs introduced an exchange-traded fund, ETF, attracted all these ordinary investors, and then the ETF's price immediately fell? They would look terrible. Their trust would be severely damaged. Since all of the newly incoming retail money was completely destroyed, that might likely be the end of cryptocurrency at that moment. If Michael Saylor believed that we were about to face another 4-year bear market, why is he still purchasing Bitcoin at these prices? The reality is that we are not about to enter a bear market. The bull run has not yet occurred. The Bitcoin explosion and breakout have not yet occurred. That will happen soon. In a moment, we will examine the chart. You will notice that a lovely V-shaped recovery is taking shape. We discussed the CME gap for Bitcoin. Yesterday, we discussed its closing. It doesn't have to close all the way. It has the ability to tap the top before continuing to run upward. However, we release this as we get into it because Tether is merely printing a ton of money. The open interest in Bitcoin has returned to its previous peak of about 70,000. What does this signify? A flushed leverage indicates a healthy market. Therefore, those who were taking advantage of the degants were flushed out. You are flushed out when the degants with these insane leverage positions open up. The market we are working with is healthier. Now, more funding can come in for the next boost. We have a bullish confirmation here if the open interest increases in tandem with the price. However, if open interest increases with shorts, we might be in for another squeeze. Let's dive right into what's happening. March 7th. What is it that everyone finds fascinating? What is the topic of conversation? The first ever crypto symposium will take place at the White House at that time. It's a huge day, indeed. Will there be any results from this crypto meeting that day? No, I don't. However, this is an action to lay the groundwork for the United States to remain at the forefront of digital assets and cryptocurrencies. This is unlike anything we have ever seen. And today, for the first time in history, President Trump completed it in just 5 weeks. The first ever crypto symposium is taking place. Do you believe Stuart Alderete and Brad Garlinghouse will receive invitations to the crypto summit? Most likely, Charles Hoskins will be present. Do you want to know who will not be present? Satoshi. Why? In any case, nobody appears to be aware of Satoshi's identity. Fascinating, huh? Now let's move on to TradingView. I would like you to look at these charts. I want you to take a look at what we have here. This is where things start to become really intriguing. The XRP chart that is seen here is this one. What do we mean when we discuss a V-shaped recovery? Very easy. It describes a precipitous, quick drop in asset values that is followed by an equally quick and powerful recovery to prior or greater levels. V-shaped recovery is the result of the price chart's V-shaped formation. I'll give you an example of a V-shaped recovery from the past. Let's go back to March 2020, when the COVID-19 pandemic struck. In a matter of days, Bitcoin fell from 8,000 to 3,800, but it swiftly recovered to its pre-crash levels in a matter of weeks. Let's discuss the fall of FTX. The most recent one took place in 2022 and continued into 2023. Altcoins and Bitcoin both experienced significant declines. Because of FTX, everyone was yelling that it was over, the markets were over, and cryptocurrency was doomed. We filed for bankruptcy, but guess what? We also recovered in early 2023. What do you think is forming when we look at this XRP chart right now? In fact, there are two of them visible. As you can see, you're climbing back up here after going down the first line of the V. We would have needed a right back up on XRP to the $2.60 range in order to finish the V, so this was a bit of a fake out. However, what actually took place? Here, we formed another V as we descended again. We experienced a sharp drop on February 27th. I estimate it was between 10% and 20%. After that, we soared back up and created a V. In fact, we flew higher to finish the larger V structure on XRP that had begun at the end of February. Additionally, this creates the huge V where the bottom hit about $1.96, the all-time high for 2020, if you zoom out here and can look below. We will now gradually increase that recovery, which will lead us to the first area of resistance, this red box, which has a price range of roughly $2.50 to $2.65. However, the V-shaped recovery will guarantee that we rise and reach our ultimate goal of entering the $3 range. What do we notice when we examine Bitcoin in this context? We are witnessing the formation of the same thing. The small V that begins here is visible to you. When Bitcoin touches and enters the CME gap that was created in November 2024, it drops all the way. And it is already beginning to recover again. One thing to consider, though, is whether we are witnessing a fake out. The fake out would be what? Rise till you reach about 90 to 93,000 and then descend again. Before we experience the recovery that will eventually push us back up and retest the all-time high, which is currently at about $108,000, do one more testing of that CME gap. We're not quite done with the woodworks, in my opinion. I believe reaching $95,000 on Bitcoin would signal that the moment is right and that the cryptocurrency markets will continue to rise. This lower $90,000 range is something I'm keeping an eye on. I do believe that another price dip and correction will occur at that point. Before that V-shaped recovery reaches its conclusion, we will retest and close a little portion of the CME gap. By the end, it surpasses $108,000, reaches a new peak, enters the $120,000 range, then rises to $175,000, $200,000, and $225,000. And guess what? All of that will happen this year.